You can toe the line when it comes to investing. Choose the stocks you like one by one. Or select Sector SPDR ETFs and add the diversification of an entire sector of the S&P 500, like financial. With liquidity, all-day tradability, and transparency. Ready to add diversification to your equity investments? Before investing, consider the fund's investment objectives, risks, charges, and expenses. Go to sectorspiders.com for prospectus containing this information. Read it carefully. Visit us at sectorspiders.com.
Coming up on today's show, I do a portfolio report card for BDD in Fort Worth, Texas. He's a 55-year-old doctor, and he asked me to analyze and grade his $503,000 retirement portfolio. Does it pass or does it fail? Well, you're going to find out on today's show. Some illnesses can go undetected for many years. Others are accompanied by obvious warning signs like coughing and sniffling and shortness of breath. And similarly, we can distinguish between a healthy investment portfolio versus a sick one by how each portfolio deals with all of the important matters like taxes and investment costs and diversification and risk and, of course, performance. Now, my latest portfolio report card is for BDD in Fort Worth, Texas. Again, he's 55 years old, he's married, and works as a doctor specializing in internal medicine. So he asked me to analyze and grade his retirement portfolio to see if it's healthy or sick. So let me tell you a little bit about BDD's investment portfolio. He's got 10 mutual funds in 2 403B retirement plans with a combined value of $503,929. Now this is through the University of Texas Retirement Program. Now his first 403B plan is voluntary and he contributed $22,500 over the past year. The other plan, his employer takes 6.7% of his annual salary and then gives him a generous 8.5% match on top. Wow! If only more employers were that generous with their workforce. BDD told me his main investment goal is to accumulate $3 million in 10 years. Is he on the right course to reaching his financial goals? Does he get an A, B, C, D, or F? Well, let's do his portfolio report card and find out. The first grading category is cost. Now, one of the many important roles that a financial advisor plays is to help their customers reduce, not increase, investment cost. Now, how is BDD's financial advisor doing? Well, after digging through BDD's retirement plan, I found that his portfolio is not deliberately minimizing cost. His mutual fund expenses, for example, are averaging around 0.92%, plus he pays another 0.45% for advisor fees, and after tallying up the cost, he's paying almost 1.5% in annual fees. By comparison, my benchmark of index funds and ETFs cost 4 times less annually than his current holdings. Also, the opacity of his investment cost on certain funds with 12B1 fees, which are being subtly funneled to his advisor, that's problematic. Next grading category is diversification. Another important role that financial advisors play is to make sure that their customer portfolios are adequately diversified by holding exposure to all the major asset classes, including stocks, bonds, commodities, real estate, and cash. Investment portfolios that lack market exposure to all the major asset classes cannot claim to be fully diversified. BDD's portfolio has exposure, thankfully, to domestic and international stocks. That's good to see. He's also varied the market size of those stocks by holding small, mid, and large caps. Very well done. It's also good to see that he owns global real estate. This is an area that many investors overlook. Nevertheless, BDD's retirement portfolio still misses 3 major asset classes, including bonds, commodities, and cash. That means that his portfolio is under-diversified and needs some work. Next grading category is risk. BDD described himself to me as a moderately aggressive investor, but he also admitted that he needs to become more conservative, and his goal of retiring in 10 years isn't that far off. So is his retirement portfolio compatible with his age and his risk tolerance or risk capacity? Well, BDD's overall asset mix is 86% stocks and 14% real estate. This is not a moderately aggressive asset mix, but rather a hyper-aggressive allocation. Besides not matching BDD's own description of himself, this portfolio's risk is not age appropriate for a 55-year-old. Think about it. A 20 to 40% stock market correction, and it has happened in the past and it will happen in the future, exposes this portfolio mix to potential losses between $86,000 all the way up to $173,000. Now, what type of setback would BDD's retirement plan suffer with potential losses of that magnitude? Be pretty serious. The next grading category is tax efficiency. A correctly built investment portfolio takes active steps to cut the negative impact of taxes. Now, this is done by investing in tax-efficient vehicles, and it's also done by smart asset location. BDD's 403B retirement plan is tax-deferred, and he has not done anything to undermine the tax efficiency of his nest egg, so a good job in that particular grading category. Last grading category is performance. Now, your investment portfolio's performance will either validate or incriminate your portfolio strategy and design. Furthermore, the correct standard for performance comparison is how a person's portfolio does relative to a blended mix of passive index ETFs that correspond to that person's same asset mix. That's the correct standard that we use when we do the portfolio report cards. Now, over the past year, BDD's portfolio gained 7.23% versus an 11.5% gain for our blended benchmark of passive index ETFs that match his overall asset mix or allocation. Simply put, underperformance of this magnitude, especially during a favorable climate like we have right now, is wholly unsatisfactory. So the final grade for BDD's portfolio report card is a C. This portfolio grade indicates that BDD's portfolio has major structural flaws in 3 or more grading categories. His weakest areas clearly are cost, risk, and performance, while his strongest area is tax efficiency. Now, putting it mildly, his goal of getting to $3 million in 10 years is quite ambitious. Let's just do the math on this. He's got right now just over $500,000 currently. If he keeps saving money at his current pace, including his employer matches over the next 10 years, he's still going to need to average a 15% return over the next 10 years to wind up with $3 million. Now, it's not an impossible feat. However, it's not a very likely outcome. More realistically, let's say he's able to get an 8% return over the next 10 years. At that pace, BDD will wind up with around $1.7 million, which I think is a more realistic outcome. Now, if he's able to get more than 8%, just count it as a blessing. Unfortunately, though, BDD's significant underperformance over the past year does not instill much confidence that he'll be able to achieve lights out performance in the future. His current underperformance is indicative of major problems with his portfolio strategy and design. Thankfully, BDD is an aggressive saver, but reaching his financial goals through an aggressive savings program alone won't get him to the finish line. He definitely needs to make some major adjustments to his investment plan and fix what is wrong. And if he does that, I'm confident that he can have the kind of investment portfolio that he deserves, a healthy one. So how is your investment portfolio doing? Go to portfolioreportcard.com to find out.